Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everyone. Welcome to Wealth Coffee Chats here on a surprisingly beautiful Friday here in Victoria, although being Melbourne, it's probably going to rain in about half an hour. I am your host, Sarah Shome, one of the finance and mortgage brokers here at Positive Money. And as you know, this is where we start to break down the strategies that are going to help you build serious wealth. Today, we're going to take a deep dive into the master limit structure. And what is this, right? So it's a facility that's crucial because it allows investors to strategically separate the purposes of their loans, which is the foundation for achieving maximum tax benefits. We will examine how this structure provides faster equity access and minimises the need for repeated refinancing. I'm also going to show you how to set up a clean, clear path for efficient debt recycling, which, as we know, is converting non-tax deductible debt into productive tax deductible debt. So firstly, let's unpack what happened in the market this week. It has been a busy week in finance. A surprise drop in unemployment in Australia has slashed the expectations for the RBA for further RBA interest rate cuts. Strong job data suggests that the economy is holding up, giving the RBA more reason to focus solely on inflation control, leading to likely a longer hold on the cash rate. And this, as you know, directly impacts the cost of borrowing, which is a key factor in what we're going to talk about today. Global and Australian shares took a little bit of a hit this week, yet investor lending has surged to near record levels, showing that despite higher interest rate, well, they're not high, but stable interest rates, we'll say, and property investment demand is strong, fueled by rising rents and limited housing supply. So keeping those in mind, what we're going to talk about today is how sophisticated investors structure that debt by using products called a master limit. And these products will become more critical as your portfolio grows. So I guess the golden question is, what is a master limit? A master limit is essentially a big flexible credit limit. It's pre-approved by your bank and it's secured against your property. Think of it as a financial umbrella, or let's go a credit card, okay? And under that, you can create and manage multiple separate loans underneath it making it easy for you to keep your investment and personal debt completely separated. So, for example, let's say you've got $1 million pre-approved. You can set loans up to that limit amount. Its primary benefit is for investors. Okay, so it's providing flexibility to cleanly structured debt by purpose, which is critical for tax efficient strategies like debt recycling without the need for constant refinancing. So I guess the second important question on that is, how does it work? So as I mentioned, Master Limit is a single pre-approved borrowing umbrella. You structure one large limit against your property portfolio. Under that, you will then have what they call splits or sub-accounts. Each split or sub-account is a separate loan, and it's dedicated to a single traceable purpose. Okay, so the core benefit of this is that it preserves the legal purpose of each debt, which is, as you know, non-negotiable for ATO compliance and claiming interest tax deductions. And I think POS Tax will be much happier with us having it all nice and separate, but it keeps your financing really easy and simple to understand. We can also restructure without reapplying, and I really think this is the number one benefit when it comes to Master Limit. I mean, there's a lot, but we'll cover that. Within the overall limit, you can rearrange, increase or decrease these sub-accounts. So we can debt recycle within this very easily without having to constantly reapply through refinancing. If we compare that to a standard loan, then we'll need to go through the paperwork and the application process. Even if we're just paying down limits, for example, there's still paperwork involved. So you can see that within this Master Limit and the flexibility of using this, it becomes a much more simple process. But one thing that I have seen Master Limits be a huge benefit for, particularly for the sophisticated investor, is it gives you speed. So speed is vital for investors, as you know, who need fast access to equity for market opportunities. So this is really good when we've got time-sensitive purchases or we need quick deposits. We sort of covered the debt recycling side. I don't want to go too far into that today because it will, that's sort of a topic within itself. I know that Kang sort of covered that in the past, but as I mentioned earlier, you can see that we can quickly restructure debt within this sub-accounts to free up or convert the loans to a different purpose. So we can convert bad debt, for lack of a better word, to good debt just by simply changing the sub-accounts around. By doing that, then we can free up more money underneath that limit, giving you access faster to more cash to buy more properties and build your portfolio. So that's sort of it for Master Limits. They are a little bit more complex. I try to keep it nice and simple, but I'm sure you will have lots of questions. If you do, please reach out to us here at Positive Money. We'd always be happy to help you. And or have a chat to your accountant, have a chat to your broker or your 6-star team to make sure that these products are right for you. Thank you guys for joining me. Kang will be back next week, and have a great weekend.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-star team here at positivementor.com.au.